Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, February 1st. So the first month of the year ended yesterday. We actually had some positive monthly candles that we'll talk about in the upcoming session, as well as FOMC day is today. So the first of 9 FOMC meetings this year. This is obviously a very big one, as you know, this is really the first, well, it's kind of the second meeting that inflation has really been abating, coming down to the levels that we really wanted it at, and to see progress. You know, core inflation is sitting just above 4% right now. We obviously want to see that back down to 2%, but progress is being made, which is why the market is so euphoric. But the big thing for today is the guidance moving forward, because the market's obviously been playing off the guidance it got from the previous FOMC meeting, as well as the expectation of a 25 basis point hike today. That 25 basis point hike is 99% priced in as per CME futures. So the 25 basis point hike is very likely to occur today and is mostly priced in. What the market will be looking for is the forward expectations of the Fed as it pertains to the economy, unemployment, and inflation. And we will understand that 30 minutes after the rate hike announcement today, when Jerome Powell makes his speech at 2:30 p.m. Eastern Standard Time. Now, the biggest thing that the market will be looking out for is the continuation of rate hikes, and whether or not that will be indefinite or there is a predicted cap on the rate hikes. The Fed will also, or we will also be looking to listen to the Fed, talking about rate cuts. Is it reasonable to expect a rate cut in 2023, or should we expect that in 2024? The market right now is pricing in rate cuts towards the end of 2023. So if we start to get, a whisper from Jerome Powell that is becoming increasingly less likely, or the market could be completely off balance in the perception of that rate cut. If that is the case, the market will likely go down and become a little bit more bearish. How long, we're not, of course, sure, but that is definitely a hawkish signal from the Fed. Now, hawkish means pretty much a bearish indication for the market, and dovish means bullish indication for the market. The dovish indication would be Jerome Powell talking about, maybe a few further rate hikes, or expectation of rate hikes ending, around a certain period in 2023. Will there be continued hikes? Will there be further hikes? Will there be indefinite hikes? That's a big question. We want to listen for a potential cap on hikes this year. Potentially Q2 would be ideal. That's something the market will be looking for indication for. The market will also be listening for wage inflation. Now, wage inflation has been a big deal because regular inflation is going down, but if those that are employed, if the workers in the economy are bidding up wages, then that eventually will force the companies to have to charge higher prices, refactor supply chains, further impacting the economy and increasing tailwind inflation. Because if they're paying you more, their margins are cut, and they still have to, operate a public and private business that is growing. So you're understanding how these things impact the end goal, which is inflation, which is really the big topic of conversation. So we'll be listening for that. And I think, as a forewarning before we go in, I would not trade anything immediate today. 2 p.m., the rate hike announcement. I'm going to show you a chart of how the FOMC typically, or how price action typically follows the FOMC. So we have the rate hike at 2 p.m. We have the speech at 2:30. Price action will be volatile in between those two periods. And then shortly after the speech, you will start to see the market shift into momentum that it will likely continue. And typically that doesn't happen instantly. Typically it's a gradual kind of growth and then a pop if it's dovish, and as well as if it's hawkish. And of course, Jerome Powell could surprise us on both ends and be neither dovish nor hawkish and give the market a very confusing indication, which could send us higher, send us lower, and then bring us back to equilibrium of current prices, because that's what's priced in for forward look for the market. Remember, 25 basis point hike, potential cuts in 2023. That's where we're sitting at now. We could potentially hear the exact same outlook for that, which might not push the market in either direction, considering it's the same exact expectation. Or potentially extend it out very gradually to push that future outlook a little bit farther into the future, which would make prices here at equilibrium. So there's a million ways to perceive this, and that's why it's probably better to be patient for your trades, for your investments after FOMC. So looking at DXY, what we mentioned yesterday, it did push back into the range. Obviously, it's sitting just above, the range that it's been trading in. We still have the low that we have not tapped. We also have this high that has been left untapped since, the beginning of January. And last time we had FOMC, we spiked up and then, shot back down. So do we spike back up again and shove prices lower temporarily before cutting back down and tagging this level, which would then send prices back higher? Or do we spike higher, spike lower, and then sit in the same area, which would be that the latter indication that I mentioned, in which prices just go volatile and end up finding equilibrium again. So, or equilibrium around current prices, I should say. So DXY, obviously still the main indicator. It's clearly wanting to show a little bit of strength at this level. And I think that that's natural heading into FOMC. FOMC is in about a little over an hour from now. So, no surprise there. And we'll be watching closely. I think if you get something like this with an immediate swing failure pattern back, that's a good long signal. And if you get this all the way down with a swing failure pattern back up, that's a good short signal. So a few, volatile patterns for DXY that are worth noting if you are trading today. Looking at equities, I expected pretty much more of a muted response. We chugged a little bit higher from the open and then shot back down lower. So, not expecting, an immediate break lower or break higher at all. Just really expecting kind of something around current prices. Up when FOMC starts, I'm expecting more or less price action in both ways. And obviously we have the high at 4,100. We have current support at 40.40. We have lower support at 39.80. So, there's no clear exact read, but if we're thinking about how FOMC is going to happen, this is where we're going to be at, when the 25 basis point hike starts. Maybe we pump up a little bit because it's the expectation. Jerome Powell starts talking. He gives a little hawkish, dovish, dance. Market tries to interpret what's going on. It sells off. Jerome Powell stops talking. We have all the data we need moving forward, and we understand the data that we don't have. And then the market will likely, push back up and then find some sort of equilibrium with previous price action before finding its next move. So this is typically how things go. And I would not expect much different. So if you're thinking about this, prices spike up to the high, prices spike back down to, maybe Tuesday lows or to meet maybe last week's lows, right around 39.50, 39.80. And then we pop back up to or back around 40.50 and then figure out exactly where we're headed. So very similar outlook on Bitcoin. Obviously, we've been in this holding pattern for pretty much the all day yesterday and will likely continue into FOMC today. We have the high end at around 23.9K. We have, some resistance around that or under that, I should say, at 23.3K. We have this ever important demand zone, which we've not broken under for several weeks, a few weeks, I should say, sitting at 22.2 to 22.3. And then we have support at 21.4, as well as all the way down to, and I'll go ahead and draw this because I have not, but I do believe it will be an important, why is this not going? There we go. And then we have support down to right around 20K, just under or just above 20K, 20.4, maybe down to 20.2, which is the low of Friday the 13th of all days. Or I'm sorry, it's the low of Saturday, which was when we pumped on Friday the 13th. So my apologies there. But moral of the story is, if you're thinking about this, and now it might not be the spike up and spike down. It could be spike down, spike up. This is just typically the most common pattern. So if you're thinking about Bitcoin, spike higher, maybe 24K, maybe we swing failure pattern above 23.3. Then you spike back down to 23.3, 23.4, or 22.3, 22.4, and then you swing back up to 23. We could also see way more volatility all the way down to 21.3 and or that 20.4K number. We've seen lots of big and large candles occur around FOMC. So that's obviously an outlook, but the best way to do it is play it level by level. The market, Bitcoin is very technically respected. Our levels have been very well respected throughout this entire pump. No matter whatever the dump is, I believe these levels will be respected. So if you can understand exactly what the pattern is likely to be based on Jerome Powell's speech, then you can trade these levels if you're quick enough and savvy enough, or you can just wait till the volatility is over. Where did price go before, where did price go before the end of all the FOMC news? And then where do I believe momentum is going to head? That's probably the safest bet to make, is kind of wait, 30 minutes to an hour after FOMC. But of course, knowing these levels, having confidence in these levels will assist you in trading. Going to ETH, very similar outlook. We have resistance at 1650, resistance just above us at 1600, support at 1530, support at 1500, and support at 1430. So obviously support can go down to 1380, 1350. So these levels are worth marking down, in my opinion, because depending on where we spike up and spike lower, these levels will ultimately be respected and give you potential trade entries for when FOMC washes out. So again, going to show this chart. I think it's very important. This is very likely what's going to occur. Of course, it could be the inverse price action, meaning we go lower for Jerome Powell stops talking, we go higher and then meet that equilibrium. So again, probably will not be trading these humps. Probably will enter a trade after here once Jerome Powell stops talking. So that's my, I'm not going to tell anybody what to do with their lives, but depending on your trade acumen, I think that is the safest bet for 90 to 95% of traders out there. The saying always goes, better to keep your money than lose your money. And on on data print days like this, it is more likely than not that traders are going to lose their money than make it. One trade that I do want to share that I think is worthwhile to look at, just based on previous price action and what I believe is going to happen moving forward. This is the DIDEX versus APT chart. Now, DIDEX has been absolutely on a tear. It's been killing it pretty crazily, and I think it has room all the way up to $5. And APT has already killed it. APT's ripped, it's rocked, it's rolled, and it is starting to look like it is going to suffer a little bit as potentially the APT Foundation and early investors take a little bit of cash off the table. Now, DIDEX has they're basically cutting their unlocks, meaning whatever is available in the supply is really just what's out there. There's not going to be too much introduced other than monthly rewards. And APT, as far as I know, still has some vesting and some supply to be unlocked. Now, that doesn't mean that any of that's going to immediately impact price action moving right now. But thinking about the trade and thinking about where we're heading, something that's a little bit more less risk averse and a little bit more unique of a trade may offer a better opportunity. So I do believe that if you can get above the 4-hour 200 moving average here, estimated 200 moving average, you have a lot of room on the DIDEX versus APT chart, pretty much all the way up to close these gaps. So the first target would probably be something around 24, and then the next target would be something around 30. So, and that this is obviously predicated on breaking above the 4-hour 200 estimated moving average. You could certainly get chucked back down to this VWAP and then sent higher. But in my view, DIDEX should continue to outperform APT. And I think that this is a good trade, provided we get the confirmation we want. We've obviously had 2 taps. We went above it once. We're approaching it again. Today is obviously FOMC day, and it's going to get a little wonky. But again, if you get that trigger, I will likely be taking this trade, as I think it's a little bit less risk averse. And you get to play on conflicting narratives, one being a crunch supply and one being, a lot of supply in the market. And both are very hot in terms of being memed and being talked about in the market. DIDEX is pretty much the largest DEX right now, and APT is obviously being talked about as an Ethereum, Solana, Avalanche, whatever L1 competitor. So, there's your narrative, there's your outlook, there's a trade idea for you that is very passive moving forward into February. So again, talking about Bitcoin, talking about equities, very likely to see this type of formation. I want everybody to stay safe out there, protect your trades, keep an eye out for, or keep an ear out, I should say, for Jerome Powell being hawkish or dovish. You're going to hear a lot of chatter. I would, good thing to do is obviously keep the news on, whether it's on your computer or on your TV. Also keep, maybe some Twitter updates from, Bloomberg Market News or DBT or 10K or something like that to understand those key clips from Jerome Powell's statements, because they're obviously going to just be shoving out all the important clips and important statements. And so those statements will obviously each have an impact, and the conglomerates of the statements will obviously indicate where we move in the future. So there's obviously no single answer today. It's just whether or not Jerome Powell is going to be hawkish, dovish, or sit right in the middle. And obviously, if he's hawkish, prices likely go down. If he's dovish, prices likely go up. And if he sits right in the middle, we're just volatile Darth Maul candles and sitting around current prices that we're at right now. So good luck, happy trading. If you're not in the TTC community, we're obviously updating trade ideas and outlook every single day. We're going to be discussing this, of course, in depth. And we always have a lot of fun and share knowledge in there. So good luck, happy trading, and speak to everybody tomorrow. Have a great afternoon. I wish the best for everybody, and let's have some fun and make some money.